Just following up on a quick question here from a new subscriber who asks why we prefer to split our trades into multiple units, and says that in the last 4 or 5 trades we took recently, we took off our first unit at our first target and then moved the stop to break even, as you guys know. But in all those recent trades, the second units were taken out at break even. So the question they're asking is, shouldn't we just then take or stick to one unit and take that full profit at that first target area? So thanks for the question. It's a great observation that you made. The reasoning behind doing it this way is really twofold. Firstly, it's a way to help with the psychology when you split your positions like this. Just quickly, for those that are not aware what we mean by splitting the orders, it simply means that instead of taking a full position with just one unit, you split the order into multiple units. So let's say you want to run 0.5% on a trade, or risk 0.5% on a trade. Instead of taking one position at that 0.5% risk, you take two positions, each of them risking 0.25% each. You're basically just splitting it. And then as you reach your first target area, you can take the first unit off, and then you can either reduce your risk by moving your stop closer to your entry point, or by moving it to break even, which is something that we prefer to do. So just as an example, in yesterday's session, we took this pound Swiss trade to the upside. We waited for a break above that daily pivot, or the R1 yesterday. We took an entry as we got closer to this overall zone. So the idea is we took 2 units. The first one we took off at that 1980 level, and then we moved our stop to break even, and we had a second target to aim for these highs going back to a couple of sessions ago. Now, so that is the premise. So you take one unit, you take it off, the first one off at your first target area, your first pivot point, or your first significant resistance or support, etc. You move your stop closer to your entry or to break even, and then you wait for that second unit to play out. Now, the reason why this is a good method for your psychology is because it allows you to buy a little bit of restraint when you trade. So you see, by taking off that first unit and banking that initial profit, that fear of missing out on that unrealized profit is drastically removed from the equation. And by removing the risk on that second position as well, or even just moving it to break even, it means that you take the risk out of the trade completely, and you don't have to worry and fear about losing that unit because you already banked some pips. You already have some pips in the bank. The second reason it helps, apart from the psychology part, is because it helps you to let your winners run. You see, whenever you are trading, you can have the strongest conviction in a trade and everything is lining up perfectly and the probabilities is high, etc. But you never really know how far the price will go, right? We don't have a crystal ball. So something unexpected can hit the wires and take you out of that trade. So by allowing that second unit to run, you're basically giving yourself a chance to hit that further target. You're giving yourself a chance to hit that deeper targets. And by allowing yourself to do that, obviously in the long run, you can make a lot more than just taking off that first unit. You can make a lot more by letting that second unit run and seeing how far it can go. Now, as per observation, in the past 4 or 5 trades that we took that first unit and then moved the unit to break even, and we've got taken out on all of them on that second unit at break even. Now, even though that has happened with these most recent trades, it doesn't happen all the time to all the trades, of course. So this was a very small sample size that just happened to work out that way. Of course, in the current market environment, we do not want to really give trades too much room to breathe. We want to keep them on a tight leash, as there's still lots of uncertainty in the markets, and markets have been very sensitive to headline risk. Now, as we mentioned, there are reasons why we like to do it this way, but of course, you can decide to just trade one unit instead of splitting it, and that's also fine. But that will mean that you'll probably won't give yourself the chance to hit that deeper targets unless you're okay with seeing the market move up and then move down and move up and then move down. For me, seeing that usually just creates a lot of uncertainty, creates a lot of unnecessary stress, which is why I like to just take off that first unit, move it to break even. Even if I then get taken out, I can always re-enter the trade later if I think I can. But the point is that it helps on two fronts, both the psychology, and it helps you to let those winners run. But again, there's no rule to say you have to do it that way. Nothing wrong with taking just one unit and taking a shorter target on that. This is basically just the way that I personally prefer to do it, to help me keep my psychology in check. So I hope that helps. Any other questions, just let me know.